Good morning, guys. Welcome back to the channel. David here with another Christmas Eve cryptocurrency update. Thank you guys all. We just passed 900 subscribers, on our way to 1,000. Seriously, it's really much appreciated. As we roll into this holiday season, I'm sure a lot of you guys are busy and you won't have time to watch too many videos and stuff, but if you do have a chance, definitely subscribe to the channel, like the videos, share the videos, either with your biggest skeptic crypto friend or someone that you think loves cryptos and just wants to learn a little bit more about it. Today's video is going to be about the stablecoin debacle that I see coming up in the future. Okay, it's weird to think that stablecoins at this point are more stable than the actual US dollar that they're backed by, okay, or that they're pegged to, right? So today we're kind of going to go through this article that I found yesterday as I was trying to do some research for this topic. And it's an article by Kimberly Amadeo, and she updated this October 29th, 2018. So it's a relatively new update. And I've told you guys this before. If you want to be an investor, you have to know the history of money. Financial money, gold and silver, oil. I mean, every aspect of financial history should be something that you attempt to take in, okay? It's going to help you within your processing and your understanding of what's going in the ebb and flows of the markets, okay? Teresa, Merry Christmas. The value of money is determined by the demand for it, okay? Which means there are three ways to measure the value of a dollar, okay? The first one being how much the dollar will buy in foreign currencies, okay? So that's what the exchange rate measures, right? The second method is, I'm not going to read the whole article. I'm just going to kind of go through bits and pieces. As you'll see, I've highlighted some things here on the page, so we'll kind of go through it step by step. But the second method is the value of treasury notes, okay? Because they can be easily converted into dollars through the secondary market for treasuries. When the demand for treasuries is high, the value of US dollars rises, okay? And the third way is through foreign exchange reserves. And we've spoken about this previously on our channel. Basically, the amount of dollars held by foreign governments as a reserve, right? The more they hold, the lower the supply, right? That makes US money more valuable, okay? But we've already discussed this, that we're at a point in history where world governments and people holding US dollars as a reserve is not only slashing itself dramatically, but is pushing the dollar to a point where the valuation has to change based on what we just said, okay? If they hold more, the value is more. The less they hold, the lower the value. If the foreign governments were to sell all of their dollars in their treasury holdings, the US dollar would collapse, okay? And US money would be worth a lot less. So it's interesting to see as we're trying to peg all of these new stable coins to the price of the US dollar, when the price of the US dollar is a fluctuating price in and of itself, okay? The dollar's value declined from 2000 to 2011, okay? Meaning that your $1 bill that you held in 1999 was fluctuating in value through the 11-year process, okay? So that's through the dot-com bubble and burst, and that's through the 2007, 8, and 9 economic real estate crash, okay? And what they're saying is that it was due to a relatively low Fed rate, right? It was due to a relatively low Fed funds rate and a high federal debt and a slow growth in the economy, okay? Since 2011, this is where it gets interesting, but since 2011, the US dollar has risen in value despite all of these factors, okay? Despite the fact that the Fed had low funds rate, despite the fact that there was a high federal debt, and despite the fact that the economies were growing at a slow rate, the dollar rose from 2011 to where we sit today, okay? And obviously that made the traders want to invest in the dollars as the safe haven, just kind of like us now, as we're looking to stable coin our XRP or our Bitcoin after a big burst. That's exactly what happened here, is that it made the traders want to buy more dollar, because the dollar was the asset that they could remove their investment from the stock market or from their bonds or real estate, and they can put it into dollar. And the dollar was actually strong and rising, okay? So obviously, as a result, the dollar strengthened against the euro, and it made travel to Europe very affordable. I'm definitely not suggesting to go to Europe. There's some very crazy things going on in Europe right now, okay? The question is really, how does this affect us, okay? The value of money affects us every day at the gas pump and at the grocery store, okay? Because the producers of the gas and the food, they know that you have to buy gas and food every week, no matter what kind of job you have, or how sick or how healthy you are, or how many kids you have. Everybody needs gas and food, okay? So like I said, they know you have to buy it every week. Therefore, the producers can pass on some of the costs to you and to me, right? They're extra costs. They can start to pass it on, because they know in these specific spaces that we have to just keep buying no matter what the price, okay? Because you will buy it at the higher price for a while until you change your habits. Now, it's not like I think that food or a gas is a habit, but the way in which we use it, the amounts in which we eat, the overindulgence that we do, that's kind of what it's saying right there. When the price of gas or food goes up, you are experiencing the reduced value of money. So every time you go to the gas station and you see the gas price is higher, your money is reduced in value, because you're spending more money to acquire the same amount of gas, or the same amount of food, or the same amount of XRP, or the same amount of silver coins, okay? So when the value of money steadily declines, that's going to be the next. It's like, this is really important. We'll use this to kind of tie into cryptocurrency here. Inflation is when the value of money steadily declines over time, okay? Once people expect the prices will rise, they are more likely to buy now before the prices go higher. Does that not sound like it makes sense to you? That once people expect that the prices are going to rise, they're more likely to buy it now before the prices go higher. So that's kind of the position that you and I are in now, as we're sitting in front of this cryptocurrency space, and markets are going crazy, and the dollar value is moving, and the stock market is falling, okay? So that's why the Federal Reserve watches inflation like a hawk. It will reduce the money supply or raise interest rates to curb that inflation, okay? Core inflation is the price of everything except food and gas prices. So core inflation, you have to remove your gas and your food out of there. Everything else, your clothing, your housing, your vehicles, your movie tickets, things like that, things that you purchase on a day-to-day basis. Ice cream from the ice cream shop. I went and had ice cream last night, and it was very good. Okay, so when it increases, deflation is when the value of money increases. Okay, so we always say that XRP is a deflationary currency or asset class, because every time you transact on the distributed ledger technology or with this XRP, it is burning a percentage of XRP. So every time XRP is used in a transaction flow or a payment providing or a corridor transaction, we're actually losing a little bit of XRP. So that in and of itself makes XRP deflationary, okay, when the US dollar or the euro is all inflationary, because they continue to print more, okay? So think about what happened in the housing market crash from 2007, 9, 10 to 11, okay? Prices dropped more than 20%. I'm just going off of this article. Whether or not the numbers, you could find numbers that say different things. I'm not going to dispute that. I'm just going off of her article. And this is an ability for us to read articles that came out a while ago that were revised and to take a look at sections of these markets that we're not necessarily paying attention to. Okay, prices drop more than 20%. Many people, and this is kind of, it is when you get into a coin that has very low liquidity or not a lot of volume, is that you can end up getting stuck in the coin. And when you want to sell it, you might have to take a severe loss just to get out, just to get it back onto the market. Okay, many people could not sell their homes, okay, for what they owed on their mortgage, which means they were stuck. Buyers were afraid that the prices would drop right after they purchased it. We've discussed this before. If you wanted to buy XRP, you could not confidently say that it's just going to go up. There's way too much downside. And it was the same thing that these investors were facing in the housing market crashes and the stock market crashes, is that once you hit these reduced rates, your fear kicks in and you lose the ability to make a decision from your brain. You start to make your decisions from your emotional core, which is not the place to make decisions, okay? No one knew when the prices would go back up. This is the same thing with us. We don't know when the prices are going to go back up, so it leaves us pigeonholed in this position of either make a decision or sit by idly and watch other people make the decisions. Okay, I've wanted to purchase more XRP over the last few days. Financially and mentally, I haven't been able to pull the trigger because of that same reason. I feel like it could go back down. DM Logic's thing is like circling in my head, 15 cents, 15 cents. It could happen. What if it does happen? And I bought at 35 cents and I didn't wait. Okay, so that is kind of it. The true value of money, the value of money increased. You received more house for the dollar in 2011 than in 2006, but families lost homes. Construction workers lost their jobs. Builders went bankrupt. Miners went out of business. Exchanges shut down. All of the same thing is happening, okay? Now, we're going to discuss in the last little bit of this video is how the value of money has changed over time, okay? Okay. In 1913, a dollar then could have bought you what $24.95 could purchase you in 2017. Understand what I just said. In 1913, money was worth a lot more. A dollar in 1913 would have bought you what it would cost you $25 to buy today. Do that calculation. Imagine that everything you were spending a dollar on today is actually $25 in the past. Okay? It's crazy. Okay. The dollar lost value slowly. By 1920, it could buy what $12.05 would buy you today, 2017. So you see where we went. We went from a dollar in 1913 buying you $25 worth of goods. By the time 1920 came, that same dollar could only buy you worth $12.05 of goods today. Okay, so you see what's happening to the dollar is that it was fluctuating and changing. This is what I'm telling you. It fluctuates, it changes. If we want to base our ideas of stable coins in the price of the US dollar, we're misleading ourselves in thinking that the US dollar is a stable asset. The US dollar has nothing stable about it. The only thing stable about the dollar is that it is the most or the least fluctuating currency at this point out of the fiat paper dollars. Okay, so let's keep going. 1930. A dollar in 1930 could buy you what? Okay, so it looks like we got a little back. A dollar in 1913 could buy you what 1438 does today. By 1950, money had lost some value. A dollar could buy what 1036 does. So you see, we started to go back down. From 1930 to 1950, we started to lose value in that, the purchasing power of that dollar again. Money has been losing value ever since 1950. Okay. In 1970, it could only buy you $6.35. $6.35. Okay. By 1990, this is it. This is when most of you were born. And if you weren't born then, you were investing then. And if you weren't investing then, you were watching somebody investing. Everybody has a reason to know why you were doing something at a specific time. By 1990, it was only worth $1.90 in today's terms. And it has only continued to go down. The purchasing power of your dollar is not only fluctuating, but it is not consistent. So if we're going to spend all of this time trying to get out of our Bitcoins or our XRPs into our stable coins, hoping that the stable coin is going to be the thing to save the market, the government might actually be hoping that that happens. The government might actually be hoping that we are banking on these stable coins to give us this safe haven. Okay, it won't be true. There will be no safe haven with the US dollar and your stable coins, because at some point the dollar will start to severely fluctuate again, and it will take you out of your range. You won't have any ability to sell a stable coin if it's pegged at $1, if the dollar is trading substantially below that 100-cent range, if you understand what I mean. Okay, so we have to be on the lookout for what the next stage is. The question has got to be, what's going to be the stable asset? Because I don't believe it's going to be the United States fiat paper dollar. We're in the 40-something year of the US dollar being the reserve currency. And like we read just now, it's only the reserve currency because it is the currency that is going down the least. And it's the most transacted currency in the world. It's going down the least, and it has the most bills floating around the world for people to transact business with. So as we move forward, the question is, what is going to be the thing, not to necessarily take its place, but to change its ability, to give it cause for evolution. Okay? Honestly, 16 minutes, 34 seconds. If you guys made it to this point in the video, seriously tell me, because I think that's amazing. This community is such a great place to be. I really enjoy a lot of the conversations that I get, even with the trolls, even with the people that don't necessarily agree with XRP or like Bitcoin, or, sorry, that don't agree with XRP and love Bitcoin. Bitcoin maximalists, I love having conversations with them. People send us videos about lawsuits and about this and that. Every single company that ever did anything successful had multiple massive lawsuits, and you have to fight them, and you have to know your project, get on your GitHub, know the team, know all of the lawsuits. Don't click on random links from people on our pages here, unless it's somebody that you know, that you trust, because there's a lot of phishing attacks and people trying to steal your information. So we just have to be careful and cautious. And we have to, like I've said before, we have to be the ones to protect ourselves. And we have to remind also each other in the space that protection and cautionary tales are the way to live. Don't be fearful of your investments. Be excited about them. And if you are fearful, know why you're scared. Know the things that you think are going to take it down. Don't just let it be because the government controls the printing presses, or because Brad Garlinghouse is going to sell 100 million XRP a month or a day or whatever. Just be confident and comfortable, and have fun, and Merry Christmas and Happy New Year. And subscribe and like and comment. Start that conversation. And like I've said, share this with your friends. And I'll see you guys in the next episode.